Hi everyone, please take a seat. Thanks everyone for coming. So it is my great pleasure today to welcome you to this call to action towards island resilience. And so I will be very, very short in my welcome and invite on stage for our keynote speech and to put island resilience into perspective and give us a lead to our panel. I'll invite Senator the Honorable Matthew Samuda, Minister from Jamaica. The floor is yours for your keynote. Thank you very much.
Thank you all, Excellencies, colleagues, friends in climate action. It is always good to join the side events. Ultimately, I've found that at COP, that this is where the magic happens. This is where the deals are cut. This is where we ensure that when we go back to our respective constituent groups, there's something tangible to report. Pegasus Capital Advisors and the Global Resilience Partnership are spearheading a transformative call to action, rallying support for island resilience, rallying support for island resilience. Small island developing states like Jamaica grapple with a myriad of challenges, from the escalating impacts of climate change to economic fragility. This collaborative initiative seeks to harness the collective strength of diverse stakeholders to develop comprehensive solutions. The call to action encourages engagement from a broad spectrum of participants, including governments, NGOs, businesses, and local communities. By leveraging their collective knowledge, resources, and innovative ideas, Jamaica will indeed benefit as a part of this initiative. Participating in the call to action involves contributing expertise, supporting community-driven initiatives, and advocating for policies that prioritize island resilience. The overarching goal is to establish a global network committed to sharing best practices, driving innovation, and ultimately empowering island nations to thrive despite the challenges. Now, for all of us who have visited or live in developing nations, especially small island developing nations, we know the particular fragility. This call to action has to be brought to life with concrete action and implementation. Ultimately, a nation such as Jamaica that has paid the heavy price over the last 10 years to achieve fiscal discipline, to achieve budget surplus, to ensure that it has macroeconomic variables that are the envy of many developed nations, was hard fought. But the fragility that we face because of issues like climate change, because of geopolitical instability, always has us one disaster away from reversing those gains. And that is why this call to action is so important. And the most important part of it is the actual action behind it. It is why Jamaica is a proud partner of Pegasus Capital. It is why we are looking to deepen that partnership. It is why we ensure that at COP we engage with financial partners from development banks. It is why we ensure that not only are we behaving ourselves in our management of our economy, but we're ensuring that we're developing the queue of projects that moves from a call to actual action. This is an important initiative. Jamaica is happy to support, and we thank Pegasus Capital for their leadership in this regard. Thank you.
Thank you very much, Minister. And so now we are going to take place and start our panel discussion. Thank you very much. So it is my great pleasure to introduce you the panel we have today to speak about this call for action. So I will start with Karima Degia, Deputy Director of Bridgestone Initiative Unit. from the Barbados. Welcome on stage. We have Craig Kogut, founder and CEO of Pegasus Capital Advisor. Welcome on stage. Markus Müller, Global Head of the Chief Investment Office of Private Bank from Deutsche Bank. Welcome on stage. And Dr. Ana Gonzalez Palazzo, Fellow at CISL. So it's great to have all of you today for this call to action. So I will start with the same question to all of you, and we have one mic, so we'll need to share it. But so, why are you today? You know, why is for you this call for action towards resilience is important? And also, who do you would love to see taking part into this call of action as additional partners? So the floor is yours.
Sure. Thank you so much. I think that in terms of why this is important, I think I will second the minister here on this in terms of the action part of what we're talking about. And, you know, being frank, I think COP has become a talk shop a lot of the time, and action is what we need more than talk. So I want to really resonate with that and emphasize that on the action side of things. So I think that's why it's important. And I think that something like this, to have impact in terms of additional partners. You know, the SIDS community is what I feel like you're targeting here. And so I would, you know, support broadening the base in that regard.
Thank you, Craig.
Karima, when you say broaden the base, obviously more people than are here, but would you include other SIDS? Because I met yesterday with folks from Fiji, and they have the same problem, and it's survival. And so I think the call to action, I think small islands everywhere face the same issue, and we need to respond rapidly with resilience so you can survive.
So for me, from an economist point of view, which I take as a Chief Investment Officer for Sustainability for a European-rooted global bank, I have to say that action is always linked to change. And change is a sign that we are alive. So this is innate to economic development. This means, then going back to the word action, economic development means also prosperity for the societies of the SIDS. Prosperity for the societies of the SIDS also means that they develop, through this call of action, mechanism which will help them to combat the changes from environment. And this means resilient, always being enabled to going back to a state of stability. And this is something what the global market has to deliver, and the global market has to deliver this especially because of the fact that from a global market perspective, the financing need of the SIDS is not big. But from the SIDS perspective, it's huge. And here now the trick comes for us as institutions together that we can really play an important role for coining our future.
Yes, thank you so much for the invitation. A real pleasure and honor being here. So I work at the University of Cambridge Institute for Sustainability, and we have a group called ClimateWise, which is formed by insurers and reinsurers that make research collaborations with us. And for this COP in particular, we have been working throughout the year on a research is more than a research, it's an action plan that we bring to COP. It's particularly focused on SIDS, and it answers exactly to the problem the minister has just highlighted. All the efforts of progress, of development, are always just one step away from the next disaster. So what we have done is a group of, we have quantified the risk now and all the way to 2050 of a group of small island developing states across the Caribbean, the Pacific Oceans, and the Indian Oceans. With the results we had of the quantification, We then teamed up with technical rating experts and put to them the challenge, is it possible to insure these economies? The results that this has revealed, they actually project a really compelling reality that these economies are insurable, and they are insurable all the way to 2050 and beyond. And so I'll stop here for now, but then, so in the next round of interventions, so if I may, I'll explain a little bit more.
Sure, for sure. No, and so then let's deep dive. We have, so Karima, we have the chance to have you on stage. You could bring us the perspective of Barbados, so resilience, what is for you, what's being done today in the Barbados, what are your main challenges, what are my priorities, and what would you expect from this call for action? What are your needs? What would you be happy to have after the call for action?
Sure. Thank you for that. And thank you again for the chance to be here and participate in this panel, in this process. In terms of Barbados and what we are doing for resilience, I think where we had to begin was to sort of recognize the commonalities we have with our SIDS, or our fellow SIDS, let me say it that way, but also recognize that there is a distinctive development profile that we have that combines the common challenges of SIDS with some uniquely Barbadian issues that we have to face, so that we cannot, cookie cutter solutions will not work for us. And we're not unique in that regard. That will be the case with all of us. And so for small islands, I think that we need to see, our partners need to see at the resolution that we are at. We need to not be seen as a homogeneous block with that we're all the same. Yes, there are commonalities, but each island, each small island is different with distinctive challenges. And I won't necessarily get into technical details on what those are for Barbados. But what was important for us is to have programming that is developed for us with our distinctive challenges in mind. And so this is where we have the Roofs to Reefs program. You see some material up about that around here. We are having some of our events around the Roofs to Reefs program here in the Barbados Pavilion. And the Roofs to Reefs program is, entirely nationally driven. And this is important. We had a panel in here a few days ago where we were talking about the Barbados model and how we've worked on debt swaps and what works and what doesn't, or at least what, is the technical opinion on the differences between what can make this work versus what doesn't. And one of the questions that came up was, how did we move forward in such a way where we made sure that what we were doing was not being driven by external partners? And a big part of the answer for that, for us, was we had to come with something. We have to know what we want that is based on, we have got technical people, we have a strong sort of body of work in Barbados, and we come with something that is based on that we are putting forward. So there isn't space for others, external partners, to come in and say, this is what you need to do. We have something that is clear and coherent. And this is a work in progress because it's not an easy thing to do. It requires data, it requires study, it requires coordination across the government. These are difficult things to do. So it's very much a work in progress for us with the Roofs to Reefs program, but we have a solid concept and something that recognizes inherent issues of Barbados, inherent island challenges, in that we recognize that land-sea connectivity is a particular challenge for us, as it is with all small islands, but especially in Barbados with our distinctive hydrogeology. And the Roofs to Reefs program kind of takes up from that with a bit of a riff on the Bridge to Reef concept, targeting what we think of as transformative sectors, targeting water, energy, waste. We need water for everything. We need energy for everything. Waste is produced by everything. So getting back to the fundamentals for transformative action. And by having something that is homegrown, nationally driven, pick your language, that makes sense for us, this is a big part of how we have been able to, in combination with a global call under the Bridgetown Initiative, move forward with a lot of things that we believe will be really significant for Barbados. And this is something with a broader call to action like what we're talking about today, where we can have a conversation about what is transferable, what makes sense, and where do we need to recognize the distinctions and work with our development partners so that they're seeing us at the resolution that we need to be seen at.
Thank you. It's very comprehensive. And maybe so, Craig, you're working in the financial sector. So we've just heard the need expressed by Barbados. So how do you relate to those needs and what was expressed? And as a side question, do you see a business opportunity in resilience in small islands?
So I'll answer the second question first. Yes, in most cases. There are some things that are not financeable by the private sector. There are lots that are. Our approach is echoing what Kareem said. It starts first with the government and what its needs. We were meeting with the minister before, and the question was, what are your priorities? And that's the start. Within that, though, things like water, waste, energy, and food, to me, are so fundamental and resilient issues that I'm actually shocked. Barbados is an extreme, but the water issue, we were speaking with someone from Fiji last night, and as I mentioned, and the water issues are terrifying there. And obviously, building a seawall is probably not something, as an example, we can do with sea rise. That's not a private sector enterprise. But I think there are lots of other issues in whether it's water supply, energy, food security, cold storage, again, depending on the local landscape, where there are powerful opportunities. If we're, in the way we're approaching things, one of my colleagues working in another small island state, and we're putting the first solar with storage in it. And anything we do from a mitigation standpoint has to be resiliency focused anywhere in the world, but particularly in small island states.
Thank you, Craig. Same question for you, Mark. So, as from the private sector, so how do you relate to the needs of Barbados, and what type of opportunity do you see?
So I think we have to take a step back a little bit and to go back to our economic textbooks. Sorry, I'm an economist. I'm a little bit biased with this boring stuff, but economics and finance both are tools. Economics is a tool for answering questions we have. Finance is then the second tool in order to make these answers happening. They are not a goal. But at COPs currently, we really discuss finance and economics as a goal and wondering why we have not closed the finance gap. Point number one. This is really a big mistake we are currently all doing. Secondly, I've just used an example completely off road here in this context, but someone asked me, Markus, why is the SDG 4 education so underfinanced? I said, look, if you put your money in SDG 4 in a country which has not a functioning labor market, you never will be able to get the return. So if someone is educated in a country which has not a functioning labor market, this person will leave the country. So the SDG 4 never will work in the country without a labor market. So we need also to provide capital for developing markets which demand what new technology will supply. Otherwise, it will go to other places. This is something which is really not talked about at this COP. And this is so crucial to talk about this. And then what Craig said is so important. This is point number 3, which ties back to point number 1, which is there are commons which are commons and never will be no commons. We need to finance things according to their nature. A breakwater will always be a breakwater and not a private wood because it protects the interests of the commons. A park for the public is a park for the public. But if I would like to refinance an economic debt, then this is something different because the economy is a potential return I could get if I refinance the debt structure through a debt for nature swap, for instance, which we as Deutsche Bank like to do a lot. So we are putting our nose into it and wanted to understand this better. And we just had an event with TNC where we explicitly discussed about that for nature swaps. And last but not least, there are also different market instruments we can use, like bond structures, for purely finance for economic activity. So we have to distinguish again between the tools to fulfill which kind of goal. And then, based on the understanding of point number 2, that we also have to develop markets for specific things, I think this will give a prosperity idea of the future, and then making it fit for purpose for the countries, and also understanding that the countries maybe have small governments, that we have a language barrier, etc., that they also have to fulfill all the requirements we ask them to do. So it must be also doable. Otherwise, it will take ages and never will happen, and the time is then gone, right? So sorry for such a long remark, but I'm really passionate about these economic underlyings.
And definitely timing for a call for action is very important indeed. Yeah. So maybe, Anna, so you already mentioned it. You recently published a paper called Risk Sharing for Loss and Damage, Scaling Up Protective for Global South. So you're expert in insurance. We've already spoke about common goods, disaster, so definitively this is very important for insurance. So can you tell us a little bit about the roles of insurance and also what are the key findings of your study and share that a little bit with us? Thank you.
Yes, okay. So with also London being one of the capitals of the risk capital markets, one of the global capitals. So we were well placed with the right type of partners to really test this idea of what is the risk that these islands are facing into 2050, not just now, and can they be insured? Because this protection, prearranged protection, contractual guaranteed protection from the risk financial markets is a resilience game changer to any country, and particularly to countries, to islands that face losing between 50 over 100% of their GDP in a climate shock. Some of them in our study face risking all the way up to 300% their GDP. And, you know, it happened to Dominica just in 2017. So I had a couple of days ago the pleasure of being with Ambassador Barron in a panel. 225 of their GDP was wiped out in a single event. So once we analyze this risk, then we put to the markets the question, can it be covered? Can you protect these estates? What we found, we didn't even know if this was possible, and we didn't know if it was going to be viable. And what we found is the economies of, well, in our study there were 12 countries. So as I mentioned, across the Caribbean, the Pacific, and the Indian Ocean. The economies of those countries could be protected with what in insurance term is called an umbrella stop loss, so that losses above a defined level of GDP are immediately covered. So in the countries which involve, the countries in the study involve Barbados, losses can be capped at 10% of GDP. So any loss above 10% of GDP can be covered. The price of covering that, the technical cost of covering that across the countries is 300 million premium per year to unlock 25 billion of protection from the risk capital markets. We are right now in the loss and damage momentum of negotiations that kind of money for premium is only a fraction of what is being negotiated. The rest comes from the risk capital markets. That's what the private sector mainly can put on the table, just using some of the loss and damage funds to unlock that kind of protection. For example, we scaled the calculation to 30 small island developing states. And of course, as you said, they are all very different, but it's just the commonality of being small, vulnerable nations makes them, unites them to be able to work out the viability of this type of financial programs. So the 30 smallest countries in the world, under 1 million population, they can all be covered for $1 billion of premium a year. And that unlocks $75 billion from the risk capital markets. That and all the losses above 10% of GDP, many of these countries can lose up to 300% of GDP anytime. So this is the power of maths applied to the current loss and damage negotiations, the loss and damage momentum, and the work we need to do from here onwards is we provided general estimate terms. We know the risk capital markets. We have been interacting with them. They are interested in carrying this risk, but we need political momentum. We need to work together, and we need to unite to make sure that negotiations and decisions channel this type of financial instruments so that the private sector can come in and help and protect the resilient prosperity that you are all working so hard at.
Thank you very much. And we are going to open the floor to questions, but I will just kickstart it. Great to be insured, of course, and great product, but also amazing to not be destroyed on the first place and be resilient. So maybe Karima, Craig, can you tell us a bit of examples already on how you build those resilient communities and resilient infrastructure? I think Barbados has been very amazing in engaging with communities. Can you tell us a little bit more on how do you do that and a few successful example on your side?
Sure. I'm going to be naughty and divert a little bit because I just wanted to react to some of what you said. I will respond.
Go ahead. Let's fight.
I just wanted to say how much I appreciate what you were saying and resonate with it a bit. We are, as you say, talking about finance has become the issue of the COP now. But I think that has happened. I mean, sort of in the structure of the convention, it is under means of implementation, recognizing, the main lines of action in climate response are mitigation and adaptation, and finance is part of the means of implementation of those things. So it's framed in the right way, but it's become the focus because it hasn't been happening, and it has become the barrier to doing the things. And so now we see it focused, but you are talking about a different type of focus in that to direct the types of financing that are available to where they are most needed and best suited. And that really resonates with what we're seeing under the Bridgetown Initiative in terms of, we use slightly different language in terms of different needs financed differently, but it's really the same thing. And so I really just wanted to support that and say thank you. In terms of... That was naughty. Well, I diverted. I had an instruction and I didn't follow it. But I'll respond to that, but I'll be brief just because I took up extra time. Barbados has done a lot of work in terms of, for example, in terms of resilience building. One area that we've really done a lot of work in is in coastal resilience and coastal protection. And I picked that one because it is something that we've led on, but also it kind of comes back to some of what you were saying. Barbados has invested very, very heavily public investment, state investment in coastal protection. It's it's work that started in the 1980s, goes back a long time. It is founded in a lot of study, and it's critical to us with how much our beaches sort of underpin our economy. And that also brings it back to the ties that you also mentioned between the fact that we can't really separate prosperity and resilience as well. But these types of things are things that the state has invested in precisely because there isn't a revenue stream. Because we have to recognize that a lot of resilience building, a lot of adaptation is inherently not attractive to the private sector. And we've done that. And we're looking at options in terms of cost recovery where it is possible. But by, you wanted me to talk more about the actual resilience itself, I think. We've done quite a bit of work in terms of coastal protection structures that are, it's quite interesting how we do these things in Barbados. They tend to be state-led, sort of bringing in the stakeholders and sort of co-developing the designs with, you know, something along 2-kilometer stretch of coastline. You may have several property owners, public land, private land, different types of properties, private homes, expensive hotels, that sort of thing, and working to develop a solution along that stretch of coastline, factoring in the needs of all of those different stakeholders, as well as keeping it in the public interest and the public good, because beaches in Barbados are public. And then designing a solution and implementing a solution that works is really quite a big challenge, and it's been tough. The Coastal Zone Management Unit probably has still some lingering stress there. But that's the type of work that we're doing. And just tying it back to what you were saying earlier in the public good aspect of resilience and distinguishing that between where there are opportunities for private investment.
Thanks a lot. No, thank you. It's always amazing to hear, you know, what Barbados has been doing and is doing. So it's always impressive. Maybe Craig, do you also have a few examples of a project Pegasus is working on?
I just was looking at an example with sargassum up there. So we've, I'll give 2 examples. And Barbados we're not working yet with on sargassum, but in our coral, we have 2 green climate fund anchored funds. One's a coral reef fund, one is a land-based fund. But in the coral reef fund, we've invested in a company that is capturing, intercepting sargassum, hopefully preventing it from getting to beaches where we also pick it up. And it can be private sector because it's being turned into something. We're not using carbon credits. We're processing it for biostimulants, and they're even making a leather product and emulsifiers. So that's an example of a needed, and the sargassum is a major issue in the tourist industry, the health ramifications. Secondly, in a totally different perspective, we're working on, in Jamaica, taking sugar land, which has been abandoned as the rum industry has departed, and planting it with both coconut trees and fruit trees and other crops. And also we're going to be building in cold storage with a view to increasing food security in the country, which is a very different, and again, we can make money from that. We have offtake to sell some of the product to big CPG companies in the United States, but it's, again, I think the distinction, coastal protection, other than from ecotourism, is pretty impossible without the government doing it. Or NGOs. But the private sector here, the land we're getting in Jamaica is from the government at a very attractive rate. So we are partnered with the government. But at the end of the day, it's very much a private sector initiative.
Thanks. Marcus, do you have example, or do you want to expand on nature?
Yeah, so what I have to say is I think finance institutions like ours need to start to understand exactly the topics we have been talking about. Otherwise, they won't come in, right? So, and I just can talk about how we've done it. So without joining the Ocean Risk Resilient Action Alliance 3 years ago, we never would have met Pegasus, because we met Pegasus through the Global Fund for Coral Reefs, which is part of the Ocean Risk Resilient Action Alliance. We never would have been able to talk to small, or as we call it, big island states, because as I said, from a perspective of the global markets, the financing needs are too small. And so on and so on. So really going into the topics and to understand them from the ground helps us as financial institutions also to find mechanisms in order to help and to support. Because this help and support is at the same time also an opportunity for us as a financial institution through attached risk management activities as well as also development opportunities. And this is something how we see it and where we are in. I know 3 years is not a long time since we've done this, but the progress we've made at Deutsche Bank since then is, from my point of view, a tremendous one. We just had on Saturday a huge gathering from more than 300 people where John Kerry spoke exactly about this: ocean, nature finance. And if this resonates so well with our private clients, then I don't know what to do else, right? And we also had Björn Rockström at our corporate event talking to our corporate clients and saying, without the ocean, we never will fix it. And what does it mean? Without the SIDS who are in the ocean, we never will fix it, because these are the stewards of the ocean. So this is all a system which is really something interesting and positive. And it's irrational to do nothing, and it's rational to do something.
Towards the call to action, definitively. Thanks. And that same question, on the example, I think you really gave a great overview on the insurance and what would be, to some extent, the limited cost to insure all those damage. In your study, have you come across examples that were successful and should be replicated?
Yes, well, the first risk pool, so the risk sharing pool in the world, came out of the Caribbean countries, CRAVE, yes. There are already great examples and great structures already. More than examples, the structures are ready to protect these islands to the scale that is needed. So what we need is to build on the momentum for the funding so that this protection can be truly available. And of course, there are private sector enterprises, there might be hotels, there might be plantations that have enough money to buy their own insurance. And they think, okay, this is not relevant to us. We don't really need loss and damage funds for us. Loss and damage and protecting countries' economies, the economies of these countries at a structural level is much bigger than a localized private entity being able to afford insurance. If the hotel or the plantation do not have bridges, do not have the water that get to it, do not have the local infrastructure protected, the insurance that hotel has, or that plantation has, is going to help, but it's not going to be enough if the entire economy of the country is not protected. So this is just the game-changing momentum that we have now.
Craig, you want to react?
No, as someone who invests in hotels, and we're doing one in the Grand Bahamas where we're helping to restore coral reefs and we're contributing, the subject's highly relevant. Because, and we are a major, what we're doing with the Coral Reef Fund is really helping to rebuild an island that's been destroyed by 2 hurricanes. And it's a brave initiative. We're the anchor of it. But if we have a major hurricane or another disaster, and everything we've tried to do is to build up the island, it's absolutely relevant that the economy be strong. It is about economic development. So if we're going to invest in Jamaica in a cold chain storage processing, our market's going to dry up. As Marcus said, it's all economic development. So as an investor, it becomes much more attractive to know the economy is strong and surviving. And so it's totally, I think it's a very well taken point.
No, and I think great round, because it also shows there are solutions today. So it's a call to action, not a call to R&D. So that's very positive already. So I think we can open the floor also to the audience. I see a few experts on resilience on the floor today. Any question, comments, remark? Good. So I think you need the mic.
Thank you. So a question, for banks like Deutsche, as they are becoming an increasingly important player in bringing the financial system to back some of these projects, how is the internal evaluation of projects changing, where initially it was all about return on capital, and therefore some of these projects probably were way low in that spectrum? How is that changing now? How is the evaluation criteria evolving to give these projects a better chance of getting funding decisions internally within the system?
So I have to say that in general, the risk we have on our balance sheet, for instance, is managed also by the regulators, right? And in order to help also some more financing to deliver for these projects, which we think in the end is more sustainable, requires maybe also an adjusted regulation here and there. Point number one. And point number two is what we really do in Deutsche Bank, and this is specifically a focus also of the fixed income and currency business, our FIC business, really to understanding the structures, but also linking this with some concessional capital and guarantee or insurance mechanism. Because without this, you do not get then the attractiveness of the projects immediately done in a way. And we should not forget why we are doing it as we are now talking about it, or why we propose to do this like this. We are running against time. If we would have enough time, we would find this out. And in future, through knowledge accumulation, etc., normal development. But Mother Nature has given us a last call, right? So therefore, we need collaboration. And collaboration means concessional capital of philanthropic money, mechanism of the capital market in order to get some projects financed. And this is blended finance or debt for nature, swaps, etc. So this means also that we have to collaborate with the DFIs, with the MDBs together. But we also need to think about to enhance our entire financial system a little bit, because the connectivity between the DFIs and the global financial market is not there where it should be yet. So this is also something. So sorry for hovering a little bit around, because I can't give you details of the evaluation, but I tried to give an idea about it, how the processes are working and the learning process. And if we want to do more, we need help and support from regulation on the one side. We need the governments or institutions, governmental institutions to de-risk, or insurance companies. And the third instrument is we need really an enhanced and changed role of our DFIs and also the financial system in general in order to make this happen, because private banks alone, they won't be able to do this as well, right?
Thank you very much. I don't know if the crowd... So I will just take one because, we still have a bit of time, Marcus, and you're an economist. I've heard you say DFIs, MDBs, never a central bank. As an economist, why central bank are not stepping up?
So I think central banks have an important role in governance of the monetary system of an economy. And this means central banks have an important and inevitable, crucial role for defining and showing underlying risks, or risks which are coming through disclosure regulation, for instance, through modeling, telling the financial sector how the risk structure could look like in what kind of scenario. This is a role of central banks. And I think if we all stick to our role, it will work out. If we would mingle too much, it will get too complicated and too fussy, and maybe someone won't like it, and then we have another problem. So really, let the institutions do what they have to do, and they should do it properly as well as we, and then we are getting this again. We need facilitative policy. Facilitative policy means disclosure provided by the regulators, by the government's facilitative policy to make something positive and happening instead of stopping it. And then it will go. I'm quite optimistic about this.
Thanks a lot for this amazing panel, very lively discussion. So maybe just before going home in a few days, so the call for action is launched. So what do you see will be your next steps and future milestones? I think that's questions for everyone. And Karima, do you want to start? No, great.
Well, this is obviously new. We've already amended this to a call for action for small island states. We're investing in Indian Ocean, Pacific, and the Caribbean. So in places like the Comoros where they really need the help. But I think one of the exciting things about small island, they're so important and they are so threatened, urgently threatened. But the fact that they're small, if we have government help, this is an exceptional government, obviously. But we're doing something with UNDP and the Comoros, working on 3 different projects. We had a great meeting in Fiji. I think the chance to demonstrate innovative insurance products, innovative banking/World Bank products, and highlight what can be done for the rest of the world. It actually gives small island nations a chance to lead the way. And there is something also wonderful, as Marcus talked about, with the oceans. And looking at the picture again there, we're not going to survive without the oceans. So even if we're starting small with small islands, that's a great place to start. So I'm really excited to help. Maybe Barbados takes a lead with the bringing a coalition together just to call across things in multiple ways.
Anything to add or?
Yeah, so nothing really much to add on because we just will go back to our desk and proceed with the work we've started. And maybe with more motivation, maybe with more ideas and contacts, but it is important not to get derailed because this is a marathon, but at the second day after you've done the marathon, you feel great. So maybe not immediately afterwards, maybe something hurts, but in general it will be great. No, just going back and proceeding, going on.
So I hear it's more a call to keep running. Okay,
yes.
That's great.
Yes, so same thing from my side of things. We already started to engage with donor governments. We started to engage with seeds governments, with the risk capital markets. Now we just need to bring all the voices together and louder and better. And for example, Craig, what you just said a moment ago, how important it is for you as an investor that the rest of the country, the economy, is insured. This is precisely the power that this initiative can have with governments, both at the seeds level, but also at the donor level. When that comes from an investor, ears are open. And yes, if you say we need the economy of this country insured for our businesses to be safe and to prosper, that is so powerful, and we need that. The risk capital markets, they are ready to insure. The risks of these countries are very viable to insurers. They have very little exposure. The diversification effect that the risks of these countries offer are very attractive. There is no reason not to do this.
Thank you. I'll be quick. I think I agree with what you're saying in that, yes, let us keep going with what we're doing. But I'll make one sort of small distinction. I think what we're seeing here and what we've seen at the Barbados Pavilion while we've been here, this is one of a number of different panels that we've pulled together. They've been small, they've been intimate, but they've pulled together a range of different expertise from across, in some cases, types of entities that don't always speak to each other. And what we tried to do here, and I like that this followed something similar, is that we didn't have sort of formal presentations and slide decks and sort of talking at people. We've had conversations and we've been able to encourage some conversation. So I wouldn't have had this conversation with you guys without this panel. And a lot of this has been useful to unpack issues and to understand each other better. And so let us keep, as you say, running the marathon, but let us talk to each other more and understand each other better and understand each other's needs better. So I just want to say thank you for convening the panel and thank you for working with Barbados on this.
That's a great final word. So I think we can get a great round of applause for the panelists. Thanks, everyone.